Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on a Wednesday, the day after the elections. We'll talk about it a little bit. We got a lot of financial things to talk about as well. Gold and silver continuing to really perform well here as of late. You know, last week I said, hey, the bottom's in. Everybody is now upping their gold forecast. Goldman Sachs, the latest now today, saying they expect gold to rally 30% as the Federal Reserve begins to slowly decrease and eventually will stop raising rates. I think 30% will probably be just the beginning. So get in while it's still good. 800-951-0592, the website at allamericangold.com, and the Dow's down 300 points. Gold and silver really fight. Gold's dead flat here this morning, 17-16, as we don't have the big wave, if you will. It looks like, and it's not official yet, but it looks like we'll get just enough, and I say we, the Republicans, will get just enough to take control of the House as it sits right now, 201 to 181. You need 218. If things go the way they are as they stand right now, it looks like the Republicans will be at 219 or 220. The Senate, on the other hand, man, and again, we'll see how it plays out, but right now it's 48-47. The most likely possibility right now is it's going to be 50 for the Republicans, 49 for the Democrats. With the Georgia runoff in December, Jason, I guess, if Blake Masters, who's cut this lead of Mark Kelly's pretty significantly, but he's still down 6 points, if he can somehow overtake Kelly, then Georgia wouldn't matter if everything else holds.
What happened to the days when they counted the votes the night of and it was over with? Why can't they just do that? Well, I guess we're not able to count votes like we used to. I wish the whole thing would just be over with and we can move on. But yes, Joe, we'll see what's going to happen. I think the election talking points are going to go all the way through December now.
Yeah, that would be unfortunate, but it appears that is the most likely case. And again, right, why it is that this is, and of course it has to do with you can vote for a month and dropping off and doing all these other things. And of course, in Arizona, there was problems. I didn't have any problems here at my station where I went. My wife and I went, but Tuesday night's bowling night, and two of my guys that I bowl with had problems where they went to vote. But the one thing that they both said, which made me kind of feel pretty good, because they were trying to tell people, oh, just put it here, and it'll get counted later. Nobody was having it. Everybody was like, nope. We're waiting. You run that thing as many times as you need to until it gets counted. So we'll see. And again, the biggest thing from this, guys, and I know that for some people it may give you comfort. It's not going to change anything. Most of the stuff happening today is really being done through executive orders. Anyway, there's really not a lot of legislation being passed. But I guess the one thing, if the Republicans controlled the House, then maybe we would stop the Donald Trump investigations and have the Hunter Biden investigation, right? But again, all of it a big distraction, Jason.
It was Republicans and Democrats that put the federal income tax in place in 1913, and it was Republicans and Democrats that put the central bank in place. So you're right, Joe. Things aren't going to be changing. It hasn't changed for over 100 years.
Yeah, and today, ironically, the day after the elections, Meta/Facebook has made it official. They are laying off 11,000 people. And again, it's a slow pickup. That's not enough. We're going to have to see more. Challenger Gray and Christmas said planned layoffs hit 50,000 last month. And so in case you guys don't know who Challenger Gray and Christmas is, they're a big tracking. They do a lot of data mining for Wall Street firms, but they track layoff announcements. So when you lay off a lot of people, in every state it's a little different. Some states 50 or more people, other states it's 100 or more people. You've got to file paperwork. You got to let the state know, hey, you're going to get a wave of people from company X because we're going to have layoffs, and usually they require you to give 30, 60, or 90-day notice. With the lone exception is, hey, it's an emergency. That's what Elon Musk did with Twitter with his 3,700 layoffs. He said, listen, revenues fell off a cliff. We had to do it. But Challenger Gray and Christmas, they track this every month. Last month, coming in, I guess, well, it would be a November number. Planned layoff announcements for November hit 50,000. Jason, we need to see that number be closer to 200,000 before there's going to be big noticeable issues in the jobs market.
Yeah, I agree with that, Joe. So we're obviously with the insane talk that we report daily about how the Fed needs jobs to go away. You know, hey, people's lives need to be destroyed so we can bring the rates down and big companies can spend cheap money again. It's insane, but yeah, it's about the jobs, right, Joe? That's the indicator.
That is the indicator that they're looking at. When we get back, more carnage in crypto, and I've got some even more disturbing news about this deal from yesterday. It may be no deal. That's coming up next. 800-951-0592, Patriot Radio News Hour, Joe and Jason. This is another gold catalyst here. This one I wasn't even planning on. You know, they've been trying to tell us for years now. You know, and who's they? You know, guys like Mark Cuban, people that you know. Oh, crypto's the new gold. And today we're finding out, just like everything else, Jason, nothing replaces gold, especially when it's not a tangible asset. The announcement yesterday, Binance and FTX, these two companies, they have their own crypto coins. These two were considered two of the biggest in the space. A matter of fact, FTX, which is now essentially insolvent, its CEO, he was a billionaire, Sam Bankman-Fried. Well, he's no longer a billionaire today. 3 months ago, he was worth $32 billion. Going into yesterday, he's worth $16 billion. He's worth less than $1 billion now, and by the time the courts get done with him, he'll have nothing left. And this is what we keep warning people about. But it gets worse. We're finding out today that a lot of pension funds, investment funds, SoftBank, BlackRock, Paragon, just to name a few, a lot of teacher pension funds were in this space and actually involved with FTX. And what's interesting is that this deal to save them may be off. It was a deal yesterday where Binance said, hey, we're going to buy them, but it was a maybe. First, we need to check it out. This morning, CoinDesk, that's one of those servers. A lot of people here in the U.S. That have crypto, have it at CoinDesk, is saying that the deal is now highly unlikely to go through, which essentially means Binance says, hey, we looked at it. There's nothing here. What was happening, Jason, is they were loaning money off of these coins, these crypto coins. You know, I'll call them coins, but let's face it, what they are imaginary electronic credits. And these pension funds and these other investment funds were buying these coins and then lending out based on the value of these coins. And it appears that Binance is saying, at least to CoinDesk, this company's completely insolvent. Everybody's going to lose all of their money. That includes pension funds. That includes everybody.
Yeah, it's what happened to a lot of pensioners when the '08 housing crash happened. They were in those mortgage-backed securities, right? And it really messed up a lot of people's retirements and their savings, Joe. So it just depends on what the powers that be are taking your money to invest in for your pension, and is it safe, Joe? You really should probably take some time to figure out what your company's putting your money into.
Yeah, I mean, I haven't checked it recently, but early this morning, Bitcoin was down to 16,000 and struggling here. The more this comes out, and again, here's the difference. The one thing about gold, one thing about silver, it doesn't go to zero. It always has value. It keeps your purchasing power in place. You know, Jason likes to call it, I like to call it too, it's savings, really. True savings. Having money in the bank is not savings. It's not. Because you're subject to inflation. Period. Now, is it perfect? Well, you're like, well, inflation's up 9%. Gold's not up 9%. It will be. It takes a little while to play out. Just remember, back in 2000, gold was $250. Right? It's now almost $1,720, and everybody and their brother knows it's significantly undervalued, and it's just a matter, I think, over the next 6 months, it's going to be a very interesting time for these markets. If we're going to continue to have, the worry now is there more exposure here? Is there contagion here, just like in the banks? And already this morning, Jason, there was a bunch of crypto guys on the idiot box screaming about, we need more regulation, we need oversight, which just tells you exactly what we've been saying. The vast majority of these coins are going to be worthless. There's going to be a couple that make it. Everybody's going to be forced into these central bank currencies, Jason.
Yeah, the IRS already deemed Bitcoin an equity, meaning it's a stock. So if you want to look at Bitcoin, is much more like the dollar than it is like gold, because the dollar is shares in the stock of the corporation of the United States of America. The United States of America has been deemed a corporation, by the way, for people who don't understand this. So when you hold dollars in your bank account, you're holding stock, because let's face it, the fiat value of that currency can go up or down, just like your stock. But because of inflation, it's always going to go down. A cow, well, there's no such thing as the corporation of a cow. Now, you could be a corporation that deals with cattle, but a cow is not a corporation; it's an animal. Gold is not. It's not an equity. It's not a stock. It's a commodity. It's a piece of metal. And so you don't have. This is why when Joe says it's true savings, it's true savings. If you have an ounce today, you'll have an ounce 100 years from now, and the cow and the ounce of gold will be the same. It's true savings. It's not going to make you rich, Joe, but boy, it's going to help you save your riches.
Yeah, and it's something where, again, this is always, I mean, forever now, right? They're always trying to create some gold alternative, and they all end the same. They all end the same. It's unfortunate, but they all go to zero. That's what happens. These are debt instruments. The crypto, I've said it a minute ago, I love the idea. I love the thought of it. They're never going to allow it. And here's just another example. I think this blow up here today, it's going to be interesting when we find out, especially if Binance does not buy this. Do they not go through with this? Then we're going to find out where all the bodies are buried and how many funds and how much money was at stake. Because it's one thing, listen, it's one thing when you buy stock in a company. Take Facebook, Meta, right? It's lost 75% of its value. Well, you still had 25% left. I mean, you still had money. And that's if you bought it at the top. Today, it's rallied. Well, here's good. I guess it's up today because they fired 11,000 people. But at least there's something there, right? If your pension's in Wall Street, right, and you're down 20%, at least you got 80% of your money still left. This guy went from $16 billion to zero overnight in a matter of probably minutes. And the problem is these pensions and all these other funds that have already had a tough year, Jason, these are going to be big blows. I've seen pensions now, at least rumors are that there's been billions of dollars that have gone into these and other related instruments. And like we said, it'll be interesting, does this spread, because these are going to be total losses.
Yeah, Joe, hopefully whoever won that Powerball, hopefully they're getting some advice to put a bunch of it in gold and silver, because anything you put your money in can be risky nowadays, Joe. And if they put some of it away in true savings, that Powerball winner is going to stay wealthy for a long time. But why do I get this weird feeling that whoever won this thing is going to get eaten alive, and we're going to have some story of the billionaire lotto winner that lost it all?
Well, yeah, they weren't quite a billionaire. $500 million.
Yeah, I know.
Is where
Paper
they were
billionaire.
at. Yeah, right. But still, hey, that's a lot of money. FedEx. Listen to this. FedEx CEO yesterday at a global industrial conference informed the CEOs that FedEx was reducing flights, parking planes, cutting costs. As they said, demand continues to get worse. At the same conference, shipping giant Maersk, they said the exact same thing, that they are going to be canceling shipments, parking boats. Of course, Maersk, that's they have the ships that are football fields long with all the containers on it. Jason, another sign that things are slowing here. No word on actual layoffs from these companies, but obviously if you're parking planes, if you're canceling shipments, layoffs are coming.
That's true, Joe. I think a lot of these airlines are having trouble making money anyways, so their losses might be a little harder to ramp up, because parking planes and having less flights for some of these airlines means they're going to lose less money.
Well, this one's FedEx, so we'll see.
FedEx.
The airline's
yes.
probably next. Yeah, the airlines are probably next.
I thought you were talking airlines. I'm sorry, I messed up on that. But yeah, FedEx, same thing. Is you were talking Meta. It's interesting how they've lost so much money. So I guess, what does that mean? No advertisers, I guess, right, Joe? There got to be companies pulling their ads, because otherwise they should be doing it right. You think whatever they did to get as popular as they are, the money they were making should be off their advertising. So single thing we talk about is slowing down, less money, not enough money to pay for advertising, paying for flights, paying for employees, and I think it's going to definitely 2023 is going to see a heating up of these slowing down of these markets and these businesses, Joe.
Yeah, and then Goldman Sachs out with a note today, and I think this really sums up, at least after the fact, a good explanation here, talking about gold prices. He says that high inflation tends to be extremely bullish for gold when the market questions the central bank's ability to fight it. Of course, he brings that up in the 70s. Remember Arthur Burns? I've been talking about this guy for a couple years now. And I've been telling you, Jay Powell is Arthur Burns. Of course, who's Arthur Burns? Well, he was the head of the Fed when inflation ravaged in the 70s. High inflation, Goldman goes on, high inflation tends to be bearish for gold when the market gives the central bank credit for ability to reduce it. And Jason, isn't that what we saw all year this year, right? The markets were trying to give the Fed credit that they would be able to do it. And they cited, hey, like Paul Volcker. Right? Obviously, I don't think anybody out there confuses Jay Powell with Paul Volcker. Goldman Sachs is now saying that the markets are questioning whether or not the central bank is going to actually be able to fight off inflation, and they're saying that they're starting to see a rise, and this is new. in inflows into the ETFs of gold and silver. That's been the only missing link in this whole demand. Physical demand through the roof. Central bank demand through the roof. We've been having outflows in these ETFs. Jason, that's over with. And now they're saying they're expecting the gold to rally, and they're saying that they anticipate further gold purchases from central banks in Q4, and they said even without it, which is unlikely, it would still be a record year for central bank gold demand, and they're saying that emerging markets have become a major player in these gold markets, talking about geopolitical tensions and trends and all these other things. They're saying that they expect gold to rally by up to 30% before it's all said and done. We'll be right back with more. 800-951-0592. Gold's up $1, 17.17. Silver is almost back to unchanged now. 21.45. The Dow. The Dow's down 275. The S&P's down 33. The Nasdaq's down 128. Just looking at this bond market, 4.1 on the 10-year note. I mean, how close can it really get to the Fed's funds rate? But this is what Goldman's talking about. No one believes now that it seems like the momentum has shifted, and that they're doubting the central bank's ability now to actually fight inflation. And I'm starting to see a bunch of people coming out, Jason, and saying the Fed's going to have to quit and inflation's still going to be 5+%, and that people need to get ready for that type of an environment.
Yeah. I think I mentioned it yesterday. From 1953 to the year 2000, the average interest rate was 7%. You know, it's only been this last generation where we've had these ridiculously low interest rates to try to, I guess just paint over the fact that things are really broken. And Joseph, there's a day of reckoning is coming, and higher interest rates are going to be normal, I believe. And then, of course, the inflation is going to be higher as a result also. So this is going to be something that people need to get used to. The 3% mortgage, we may not see that for a very long time, Joe.
Yeah, and again, Goldman Sachs, listen, not that physical and paper are tied together. They still want to pretend that it is. Okay, that's fine. They've actually started putting numbers based on central bank gold buying. 250 tons, gold's got to go up 12.5%. 350 tons, gold's got to go up 25%. They said if central banks are going to be buying 400 metric tons every quarter, gold's got to go up 40%. Either way, the realities are that as the markets turn away from the central bank, you're going to see more inflows into the ETFs on top of the physical demand, on top of the central bank demand. We're going to see a lot higher price. And tomorrow, listen, let's not forget tomorrow. Right, we have the inflation number tomorrow, and there's a good chance. Listen, we don't know, right? But there is a good chance we could see a print in the high sevens, and I think the markets would perceive that as a good thing. That could create more dollar softness, right? Because as they see, the Fed doesn't have to raise rates for longer. Inflation starting to come down. But by the way, it's not. But it just so happens that's how the numbers work, because we got a big number falling off. We could see another opportunity for gold and silver to spike higher tomorrow. I just got an email. This is the lead pipe stone cold lock of the month here. I've got 165 20s. And I apologize for people yesterday. You don't know what the deals are going to be. Yesterday, think about 20s, $2,125. And if you bought, you had to buy 20 or more to get to $2,095. I've got 165 of them I don't care if you buy one or you buy all 165. $2,075. That is $50 off. And Jason, you know that. You don't get $50 off when it comes to gold. That doesn't happen.
Yeah, it's a tightly controlled commodity. So if you can get the big sales, like when they come down the road once in a while, you should jump on them for sure. And
well, here's what happened. Listen, gold's gone up $100 in 3 days.
That's right.
This wholesaler is saying, "Hey, listen, I'm making good money. I'm going to reduce it. I'm going to call Joe. Joe, put them out there, get them gone for us. We want to cycle some inventory here. This is a huge opportunity. A lot of you out there have been waiting and waiting to get in. Now is the time. This is a fantastic opportunity. If you are new, if you've never bought from us before, it's so easy. We're not like anybody out there. We're not like these other gold dealers. We actually want you to buy the special because it is special. The price is fantastic. This one's way above what we normally, $25, $30 is a lot. This is $50 off. Just call the 800 number, 800-951-0592, and just tell the girls, I want the special. That's all you need to say. And listen, we're going to ask you one real hard question. How many would you like? 1, 5, 10, all of them, right? Whatever quantity you want. Obviously, we're going to get some information from you. Just so you know, we don't call you. We don't sell your number to anybody. No one's even going to know you've done business with us unless you've told them. Privacy is a big deal for us. Why do we like old gold over, say, a gold eagle or a maple leaf? Well, for 2 reasons. One, it's the most private way to own it. In other words, you can buy it, sell it, trade it, not have to give out your Social Security number, not have to worry about 1099s. It's extremely liquid, right? It's liquid with a phone call. Jason, we buy everything. We buy and sell. It's very easy, very simple. And by the way, the government considers it to be a collectible. Why is that important? Well, the last time the government confiscated gold, 1933, there's only gold coins you were allowed to keep were collectible gold coins. Look at what's going on with these central banks right now. Do you not get it yet? Everybody knows this fiat system we're currently in is coming to an end. And the bankers are creating this new system, and everybody better have their gold. And people are talking about the need for them to back their digital currencies with something. I didn't think that our government would need to confiscate gold again, but Jason, it's very possible, depending on credibility, depending on how ugly this gets, that could be the case. So why not just make sure that you can keep yours, because this is considered a collectible. It's the only gold you cannot put into an IRA. Think about that. I think that just tells you the difference here. But just tell the girls, I want the special. You tell them how many you want. If you're in Arizona or Colorado and you want to go and pick it up at our offices, you can do that. If you are far away or it's a long drive or you're in another state, it's just $35 to ship, and we ship everything FedEx. 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. I've got 2 lines open. I shouldn't. You want the special. $20 gold, $2,075. And I can't stress enough, not all deals are equal. This one is far and away the best deal out there right now at 800-951-0592. It is such an easy process. You just tell the girls that you want the special. how many you want. If you're going to be picking up, then you tell them, hey, I'm picking up in Phoenix or I'm picking up in Colorado. And what we'll do is we'll call you when your order's ready to be picked up. And it's just that simple. If you're like, it's too far, right? Maybe you live in Chandler or Tucson. You don't want to drive all the way up here to the Deer Valley Air Park, or maybe you live in Aurora or Cheyenne, Wyoming, and you say, it's too far to drive to Johnstown. Or if you're in another state, doesn't matter. We ship in all 50 states. We got customers in every state in this country. We got customers in every U.S. territory. We ship to all of those locations, and it's only $35. That's it. So you come in, you say, hey, give me 10 20s. It's only going to be $35 for the shipping, and we ship FedEx. 800-951-0592. Another layoff. Things are starting to pick up here. This time now, Redfin saying that it's closing its iBuying business. So Redfin, like Zillow, they were starting to buy houses and stuff like that. They're out of that, saying that they're going to be laying off 13% of their workforce as the housing market continues to slow. And Jason, I think, again, we're starting to gather some speed here. Housing, there's so many tentacles to housing. I don't see how you can sit there and tell everybody with a straight face when housing's down 30, 40, 50, 60% that it's not going to have an effect.
Oh, yeah, everything's going to slow down, Joe. Everything's going to be slowing down. If you look at it just, day to day, week to week, over 2022 especially, you're just seeing it, Joe. I mean, I sit here at the radio station. I talk to Joe regularly. I tell him, look, 2021 and 2020 are just almost a different world because all that printing that went on, all that free money that flowed around, well, they're not doing that anymore. You don't hear stimulus packages being handed out to people anymore. There's no coronavirus pandemic going on. Even Joe Biden said it was over. So all the freebies are gone, and now with the Fed not printing money, at least that's what they're showing us with their balance sheet. We got a world that is got a drug habit of free dollars and cheap dollars, and you end that. Even if you don't sell off assets, you just simply stop the money flow. Things are going to slow down. Jobs will be lost. Housing prices will go down. These are the times that you buckle down and are glad that you have things, you have assets that will retain its value when a lot of asset prices, Joe, are just going to be tumbling downward. I mean, that guy, the cryptocurrency guy you talked about, there's a lot of guys out there. That's not the first time it's ever happened. These things happen decade after decade after decade, Joe.
Yeah, I mean, we had tulips and what was that, like the Netherlands? I mean, there's always the next great big thing, and then the same thing tends to happen, doesn't it? All of a sudden, and of course, FTX, this was a major player. This wasn't like some little obscure coin that traded for, 0.000235 cents. No, this was a major player that had a ton of Wall Street players in it, a ton of pensions in it. And again, does it spread? That's going to be the telltale sign here. And again, these are billions being wiped out, right? These guys, hey, let's face it, billionaires spend lots of money, and these wipeouts are just another effect.
And the numbers you were talking about with that guy, Joe, $32 billion down to $16 billion down to less than $1 billion, it makes you – well, I'll just go back to that Powerball winner. Yeah, $500 million doesn't seem like a lot of money when you talk about those kinds of things, Joe. Things get wiped. If you do not understand what your money is and what assets are and what risk is, if you don't get this stuff, then you're going to lose. You're going to lose big. Gold is not risk. It's just not risk. You're always going to have value there. You always are going to be whole. Yeah, if you got some extra cheese on the side, go gamble. Go gamble. Bet on this company. Bet on your brother's new company you just started. That's great. But obviously, you wouldn't take all your life savings and put in your brother's company. What if it fails, right? Right, Joe? So this is why you have gold and silver. It sits there and protects what you've got.
Yeah, Bloomberg reporting now Citigroup is the first bank to starting to eliminate investment banking jobs. So we've seen Wall Street banks get into the layoffs on the housing side, right? Their mortgage business. Bloomberg reporting now Citibank is starting to eliminate jobs across its investment banking division, saying that the layoffs started this week. And, obviously, when you're talking about Citigroup, their investment business plunged 64% this year, Jason.
Well, obviously, if they're going to break U.S. sanctions to do business with Russia, there's probably a problem. And J.P. Morgan's the other one that's doing business with Russia and breaking sanctions. My guess, those two banks are in the biggest trouble right now for the big banks.
Yeah, so we're going to have to keep our eye out. How about credit cards, which has hit all-time record high? We've never had so much debt on credit cards. It grew again in the last month by $8 billion more dollars. But, Jason, that's a lot slower than the previous 3 months, and people are starting to say, is this it? Are the credit cards maxed? We'll have to wait and see. Patriot Radio News Hour. Get those 20s, 800-951-0592. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Final segment here. Joe and Jason, and I will have those $20 Liberties. They're $2,075. You're saving $50 a coin. One of the major players out there, wholesalers, on this big move came out and said, hey, you know what? I'm going to pass the savings along. We passed it along to you today. Take advantage of it at 800-951-0592. And you just tell them, I want the special, and it'll be just that easy. You just tell them how many you'd like, whether you're picking up or we're shipping. We add $35. Here's the thing. Once you order, you get a trade number. You're locked in with us. Gold goes, as an example, starting on Friday, gold's gone up $100. Everybody that ordered on Friday, they paid the price from $100 ago. Everybody that ordered on Monday, they paid the price from $50 ago. So gold jumps tomorrow on a soft CPI number. If that does happen, you're locked in, and so are we. But what that means is no matter what gold does after you get off the phone, it's irrelevant. It goes up, it goes down. You're locked in. I'm locked in. Everybody's locked in. And that's just how we do business. Kind of the old-fashioned way of doing business, Jason.
That's right, Joe. That's right. It's good to be a part of Patriot Trading Group. I've loved since I've been here in Colorado, meeting with the customers and seeing them come in, because when Joe brought myself and Brian in, we did not have the physical office here. So it's always been kind of a pleasure to meet the customers and talk to them and build these relationships, because it's been good for Patriot. It's been good for myself and Brian. So I love to see that, Joe. And there's one last thing I want to ask, because we haven't really talked about this. This will be something we'll talk about, I think, in the near future. But you think the debt ceiling, you think that's going to turn into something real this time, the debt ceiling?
No.
No? You think it'll just
be
passed
through? The debt ceiling is nothing more than political theater, and then they raise it.
What if the Republicans get in the way?
Without the raising of the debt ceiling, we would default.
What if the Republicans
we don't have the money to pay for our debts?
What if the Republicans just stand in the way this time, though? It's happening, I think, in the next month, maybe early next year or late this year. Is it possible the Republicans just stop and just stand in the way of this thing?
They will for a while. They will. They want to give the illusion that they're fighting something, and I love the people that make the argument that somehow the Republicans are fiscally conservative. They're no more conservative than these Democrats. And this has been the problem all along. This government has gotten so massive, it's so out of control, and it's killing us now. And now that the rates aren't zero, all of a sudden now the debt numbers are getting significantly worse. I mean, think about the first month of fiscal year 2023, which was October. Year-over-year debt level was up 500%. Now, of course, that's not going to be every month, but you get this understanding. And think about it, they actually cheered. They were gave themselves a big pat on the back because the debt last year was only like $1.4 trillion. Oh, look at what a great job we did. Yeah, well, that's done. Right? Now, here's the problem now. 3 trillion, 4 trillion, 5 trillion. Right? It's never ending. That's why you have that gold put away. Of course, that's why fiat money's coming to an end. 800-951-0592.